Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Hi, Marty. Thank you. And how about YouTube? All right, thank you. Well, thanks everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. It's Friday the 13th, 2026. How exciting. And this stream is about integrating bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades. These are available to everyone in the Bookmap Discord TraderLab community. There's no cost for it. If you're visiting in YouTube, there's a link there. You can visit the TraderLab, but you do have to confirm your Discord username, and this is open to everyone. The TraderLab is really about the business of trading and building out trade plans, understanding how the market works, why it does what it does, how to get in alignment with it, and also use vetted or structured trades so you can determine whether a specific trade or condition of the market with specific trades that you have vetted or reverse engineered give you a positive expectancy or statistical edge over a random distribution of outcomes. So that's the business. Now, the other part, and you need to kind of focus on this one piece, random distribution of outcomes. Every time we engage in the market emotionally, we're attached to the outcome. It's a right or wrong experience for us. It's painful when we take stops. Okay, right? Now, the other part of this is, but what is the business? Our emotional attachment and our responses emotionally have nothing to do with the business. That's our problem as humans. That's our primal wiring. All right, attachment. But the business is actually random in the sense of edge is not something that shows up every time. What it does is it's random and the market's random. What edge is all about, and this is where we need to kind of diverge from how we feel about it and what it actually is. Edge is randomness with something that favors you over a random distribution of outcomes. So the conflict for us is needing certainty, be right, avoid pain, get approval, all this. We're so intelligent, validate our self-worth, all emotional needs as human beings. And then the business is gaming, which is just taking samples of the market where you have an edge and depending on this extracted edge that you've researched to extract the dollars on that in the random basis from the other participants. So isn't that kind of diverged? That's our problem. And maybe in TraderLab you might find a solution. So let's go from there. You guys tracking? Please give a like if you're visiting in YouTube and welcome to the Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into real time, we talk. On the other side, this is really about the business of trading, attempting to get in alignment, and then, as they say, let the chips, no pun intended, fall where they may. So, one brief announcement. Starting Monday, I will be showing and quoting the June contract, so ESM 26 or 6, depending on your data provider, but I will be rolling over. And that also means the prices are going to adjust for the spread between the expiring March contract and the June. So whatever that spread is, you're going to see all prices adjusted by the spread. But the structure that we trade using the volume profile and the structure trades, all that stays the same. Structure stays the same. The actual price changes, but it doesn't mean anything as far as, because the behavior that creates all prices, other than the spread between these two contracts, all stays just about 100%. I say just about 100% the same. Need to know that. So Monday. So rollover this weekend for me, and of course you determine what's appropriate for you. None of these are recommendations. Now, very briefly, this is the hierarchy of trading that I share in the TraderLab. All it is very simple. Auction market theory is shopping. Volume profile is how we see the distribution of volume. All prices aren't created equal. Time frame is individual to you, and an integration or vertical integration to time frame, very important to understand. Trend can be down, you can be long, it doesn't matter. What matters is identifying in your time frame what the condition of the market is. It's a vertical integration. Now, the other part of this is some traders may be going, the trend can be down and you can be long, because in your time frame you're taking longs in the rotations. Context is rotation or time frame specific. And then we have order flow. And order flow is not time frame, it's just behavior. And this is where I say the rubber meets the road, because this is where we drill into microstructure. Now, just as a reminder, there's 60 PDFs of structured trades that are available to all of you in TraderLab, as well as a library of webinars in the TraderLab community. There's no cost. These are free. What you need to do, though, there's no plug and play. I always have to apologize for that, because don't we all wish there was? How long you've been trying plug and play? How's that working out for you? So instead, what I've done is I've shared actual trades and screenshots, and I'm not a vendor. There's no cost for this, but I'm not a full-time, let's just say, this room that I have is really based on all the participants, not just me. So it's, you might say, takes a village, you know. So all these are available. There's 60 of them, some explanations, and it was never intended to be a trading course. It was just traders were always asking me, what are you doing? This is order flow. I was short. This is a live trade. This is a bracketing algo, just as an example. Notice how they pull and they push. I'm sitting short. It was like, I'm out of here. And then market exploded. These are some things you can kind of, pick up. And then again, you have to vet everything. The best idea, I think, for you is if you're experiencing trader groundhog day, work hard, wake up in the same place, random winners, no edge, still losing, leaking equity. That means over time, it's not going to change. And you can keep trying to fix it like we all have, but most likely, you're going to end up with the same outcome. That's our nemesis in trading, randomness. Now, going to the higher time frame. This is an Investor RT. It's my higher time frame trading software. It exports levels to Bookmap. Very cool. Let me show you just some quick ideas here, and then let's move on. These are intermediate time frames, and what I tend to do, and I'm not going to spend a lot of time, this line, this thick line here, is an intermediate time frame high volume area. And I think a high volume the same way you might if you go to the store. The store is a retail price, and buyers and sellers buy and sell their product at a fair price. It is a retail price. So if your tuna is $1, you pay $1, they sell you the tuna, and off you go. But if this is too high, this high volume, and the buyers come back to a level that was fair, what happens if the price now is too high and you can buy it elsewhere at a lower price? You're going to leave the store, you're going to get in a car, I know, apologies in advance for a poor analogy, and you're going to leave. Now, what happens if we find an excess? By the way, nobody knows where that is until hindsight, so let's get over it. And then what? I now come across the range, and I take out the stops here. Just so you know, there's buy stops above here. This is what creates rotations. Now, what do I know? I know this is too low, and I know this is an outside edge. Now what happens? I go up, and this is my high, okay, all-time high. But let's look at another piece. When I rotate down, this area here, so look at this, too high, and I don't know, this is now the fair price over here. I test it, too low. Oh, it's on sale. The difference is, if I find too high, I'm going to try to find too low. If I find too low, I want to find fair. And then what's too high? This is what creates rotations. And then too low, too low, too low, support, 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 right? Then what? Outside, and what's too low? Where's my outside edge? Well, if I come back inside, what do I do to I get more buyers. So I got buyers in here. I get buyers in here. But what's this up here, Tom? Remember what that was? Support, right? All in here. What about this? If I get buyers here and I get buyers here, then what's too high? This. If this is too high, what happens to the longs in here? See you later. Thanks for playing. We'll send you a coupon to the buffet. Down. Now, we gap lower. Outside edge. Watch. This is all pretty relevant. I find my buyers again. What happens to these guys? Up we go. And what do? We squeeze the shorts here. And then I get continuation buying. What am I doing here? I'm getting buyers above this high, so I have more longs up here. And I have shorts in here, so we're squeezing. What happens if I come outside and it's too high? We can sell it, and where's my fuel? My buyers in here, you see? So now, south, and this is yesterday, and this is the gap. And then what? Well, I know there's stops under here, and now I'm going to show you today. Now, today's plan for me, not anything more than what I do, not a recommendation. Who knows, right? Clueless. Not ignorant, but definitely clueless. So here's what my thing is. It's Friday. The market is short. So what I anticipate, and you'll see also why, is the possibility to take out yesterday's high, fill the gap, and come up to what was the fair price in here. Because am I going to get continuation selling today? That part I don't know. But there's another part of this. And that is the ETH low tested this. And I'll show you that. And this is an outside edge. So what I know is if the ETH low tested here and I'm going to open in here, then who's vulnerable? The shorts here, the gap, and this, the fill. Okay? So for me, yesterday's high, ETH high, and then I have resistance around 42, and then the gap fill, and then the gap and up. Is everybody with me? And then around 68. So initially my plan is squeeze shorts and then see. And the other possibility is an outside day, which initially was not what my plan was. In other words, my plan is flexible though. So my plan was get the shorts and then see what happens. What kind of a squeeze? What we got was the shorts, and then the sellers came back in. Let's remember the higher time frame trend is down. So what I was trading this morning, just to make it clear, was a short squeeze and then go from there. And that was my primary first trade. Then when that structure fell apart, then it was wait and then turn around for continuation short. So that's just me. Not saying it's good, I'm just saying it is what it is. So let's look at our context grid sheet. We're opening, one moment, context grid sheet. We're opening range in value. So what does it mean? The market's in balance. If the market opens in balance, hold on. I'm going to show you something else here, just a little bit. Remember I was saying how this is important here and why it's support, retail price, intermediate time frame, and this is the RTH. Each RTH has its yellow line is the high volume. High volume in the tuna, remember, is retail. So if it's too low, you see, oh, it's on sale. That's why you go high. But what happens from the other side? Let's look from the other side. If this is too high and that's too high, I'm out of here. If this is too high, retail price, and I test it, no precision, and I get below it, I'm out of here. If I open wherever, I don't remember where we opened, but new retail price, and then yesterday, retail price. So for me, at first trades, I just want to remind you were yesterday's high, into the gap, maybe here. This is my outside target. If I come up here, no bueno, and then all it was, the shorts are very weak. So the short squeeze, remember, is the first trade. Then this is my retail price. So if I get long, I'm conscious, and let me give you statistics. I'm opening in balance. That means possibility two-sided trade. That's door number one, two-sided trade. Preference, short squeeze. Next, clueless watching. Changes, trade management, and then if I don't have a short, I have no short until I get one. And I'll show you those. So if the market's in balance, two-sided trade. We can also trade both sides of this yellow. Let me just get this off of here again, and then we'll move right along. This yellow outline is called value area. 70% of the volume yesterday, and all of these, took place in here. If I get inside of value area, there's about an 80% probability-ish, past performance not indicative of future results, to come across the range. Also, the fair price, that yellow line, is also an attractor. And that one, if I'm opening higher inside of range, I think it was higher, hold on. Yes, higher inside of yesterday's range, here's some statistics, and you have to vet these for yourself, and you'll see how this drives the bus. Taking out the ETH higher low has a 97% probability. Taking out the previous high or low, an 82% probability. Taking out the ETH high, a 76% probability. Taking out the previous value area high, 72% probability. Taking out the previous point of control, which is the yellow line, 68% probability, and you have to vet everything for yourself. Now here's a couple more for you that are kind of important. Take some notes and vet these. Taking out both yesterday's high and low is about a 10% probability. And that's why that gets me initially on the long side and the ETH high and low over 90%. Well, watch. Here we go. Now, based on statistics, this is why my first trades are longs. You need to understand maybe the thinking. Thinking is plan-based. So here's what we have. Now remember, let's come back here to the ETH low. ETH low is here, and the key location, I got to just show you this, 6640. Higher time frame. Very important to see how the plans are put together. 6641 is this outside edge. There's stops under here. Well, if my ETH low tests this and then I come back in the range, wouldn't that potentially lead you to think maybe we tested our excess and now the shorts that are here and the gap might be on the hook? So that is all why longs for me. And again, not saying that's a good idea. I'm just saying that's a plan. You know, it is what it is. I don't think much more about it than that. So let's go take a look now. Is everybody tracking so far? It's important you understand rationalization for plans. And then, so the idea, now the other part of the plan is these are conditional plans. In other words, as long as a condition exists, and it hasn't changed, I trade, one direction. And I primarily attempt to trade with the side that's getting run over, So or the squeeze. So if the market goes up first, there's two things I know. I know there's shorts in here from yesterday, so I'm trading against those shorts. All right, so that's the squeeze. Then the other possibility is, and I don't know how far it squeezes, I just want you to know. But there's always two sides, right? So if the market goes up and squeezes, what about the longs that come in? Is it possible that then they get run over? Now, I don't know the answer. I know it's possible. So my plan allows for change, and I don't know where that's going to come. So I just sort of, do my thing, and whatever happens, happens. There's not a right, wrong in business, and at least in this business. What there is, as I've experienced it, is alignment. So let's go take a look. let's look at what we know. Overnight volume point of control is the last auction ETH high volume area. I'm going to take these off. Let me get rid of some of this stuff here. I'm going to clean this up, and then we'll start anew, as they say. Okay, so let's look at what we have. The market is short. Now I'm going to show you longs. Now, here's an important element, and for me it was, I'm going to use the term dilemma. This is the fair price from the ETH. I know, so, and I'm in balance. Remember, I'm looking for two-sided trade. Now, the problem naturally is, where do you engage, right? And what I do is I've accepted that I don't know the outcome of any trade. I've had to accept randomness. So I'm not about being right. That's never worked for me. So I'm not in the be right business. Here's how we changed, remember, the psychology. What is right? Right's the plan, only taking trades with edge. That's right. Not taking a trade because of fear, not right. That's error. Doesn't matter the outcome of the trade. You see what I'm saying? So in the business of trading, it is really all about just following your plan. By the way, can somebody post in YouTube? I'm not seeing any posts. No. I'm trying to address this. I'm not able, it appears, to get him. Don't know why. All right, try again. I do not understand, so I'm not able to see the chat. Give me 1 second, guys, okay? I'm going to try to fix this. I can't tell you why. I do see there, but I can't read any of it. It's all truncated here. One moment. Let me try something else. Okay. Okay, I think so. Still problematic here. Let's go. Okay, I think we're good. Maybe. I don't understand why I'm having a problem, but hey, there's a lot of things I don't understand. Okay. You know what it is, Stephen? The chat is not below the stream window, if you know what I mean. It's all the way over on the side, and I can't, for some reason, I can't move it. So more work for the weekend. By the way, I am rolling over. Let's get back to this. I'm sorry about that, guys. Thanks for your patience. So this is the RTH Open. Now, this is something I developed for myself many years ago. It's, again, you have to vet everything, and everybody takes stops. If you don't want to take a stop, that means you don't want to pay bills. How do you experience a stop? Remember, this is the psychology. Oh, I got it wrong? No, maybe not. Maybe your plan says take the trade. So then did you get it right? Not the outcome of the trade. So I call this a variable high volume node. I made this up for myself. Now there's a couple things I got to be very aware of here. One is that the buyers that come in here, this is the RTH Open. What is the condition to the market? Market is what? Short. Statistical probability to take out the ETH high or low, let's remember, is almost 98% probability. I'm going there. Who knew? Yesterday's high. Let's come back. What's that one? Yesterday's high or low, right? So if I see yesterday's high here, what's above yesterday's high? Buy stops. So for me, it's longs, okay? That's it. Now, this is the fair price from the ETH, and this will get you. Wait a minute, I got to put this in here first. This is the fair price from yesterday's RTH, and I have resting liquidity. Immediately, I have a conflict, and here's what it is. This shows me my buyers. And I'm going to try to do this and this because there's buy stops. Remember the short squeeze. And I have liquidity up here. So I'm aware of this. And I've got liquidity here, which is in alignment with this. So I have magnets. This is a magnet. This is a magnet. Resting liquidity. Here's my open. What am I doing? Which way is it going to go first? Here's the answer. I don't have any idea. There. And that randomness is what paralyzes us because it creates fear. You're going to have to find, one moment. You're going to have to manage your fear. And the only way you get a way to manage fear that I found is statistical probabilities, not just what's it going to do, because then all you have is emotion. We're always going to say what's it going to do. That doesn't change, does it? So if it's always random, then where do I trade? I trade where I have an edge. That's the end of it. And then whatever happens, happens. This says in the way I perceive the market, not saying it's right, it's just the way to do things. This is too low. This is the fair retail price. Now, what I've done is I've dropped down in time frame, as you think of it, and I'm using the same process I showed you at the top of the stream. I'm now intraday. So this VPOC movement, this is the high volume. Remember, this is shopping. So if I find a price, and this is the RTH open that might be too low, if I get more volume up here, think of the store, maybe this price is too low, and I leave it. Now I have my volume here. Don't forget it starts at 0 over here, so it's not like there's much going on, right? So show you the detail. So what do I know here? Too low. So when I have this is resistance. I'm taking it down now with the scalpel. I come down here. That is too high. This is the fair price, new price. Here's the options. I know you love this. It could go lower. So then this becomes too high and that's too high. Or I cross above it. Now this is too low. And then what was too high? This. So I end up with resistance, cross above, support, teeth chatter. What's this? Resistance, break above. What does it tell me? In the microstructure, this is too low. I'm going to label it. Who knows? And it's called a high volume node. Variable high volume node. I made it up. What I do, among other things, is track the change in the shopping experience. So shopping. So what does it say? Language. This is a language. It's order flow, but when you understand, now I don't use indicators, I do measure things, but I'm looking here because this is happening over a couple of seconds. I'm not waiting on a time-based process, 5 minutes, 2 minutes, whatever it is. Don't use candles. Anyway, you do whatever you need to do. I've been there, done that. I don't do it. I don't do it because most retail traders do the same things and they fail. Over the years, and it's going on 47 years, I found that as I developed, I was doing what other traders did, and I got the same outcome. Random winners, but I was trying to fix it all the time. And of course, to make it better. When you have winners, you think it's just make it better. What I found was it had nothing to do with the random winners. What I found out was that the winners were the problem because I didn't have an edge, and I could see patterns and have winners and think I'm really doing good and even have winning streaks and this and that. But over time, if I don't have an edge, I'm still leaking equity. That means I'm going to go out of business. Most retail traders go out of business. They don't understand that it isn't about winning trades. It's about statistical probabilities and randomness. Everything is different. Okay, so too low, resistance, New retail price, support, break high. What does this tell me? Maybe too low. Micro, again, I'm using a scalpel here and we're not even in, this is 2 minutes right here, okay? So this is very aggressive trading, and I don't recommend, of course, anybody take any trades, mine or anybody else's. Just do your own thing. What I always like to do when I discuss the open, because I can show you behavior in a very short time frame, so I can give you a lot of, let's say, educational value in time. So what does it say? Too low, resistance becomes what? Support, break high, support. Support. What's this? Support. What's it doing? It's going higher. Now, subject to your plan, you could, now here's what you have to be aware of. This is the opening swing low. What's going to be under here? If I get buyers in here, I already know there's going to be stops right there. Opening swing low. So I got to label it. Because how does the market work? Market goes up to go down and goes down to go up. Who knew, right? So opening swing low. So right away I know, don't forget I'm looking for the longs because the short squeeze. I know eventually, unless I just keep going, which nobody knows, I can come back here and get these guys out. And let's not forget one other important piece. This naked volume point of control, which is the retail price from yesterday, has a 68% probability. I am not ignoring that, and I'm not ignoring the resting liquidity. Is everybody with me so far? This is what I know. I don't know anything else. Wish I did? Don't. So I don't expect to know because I've learned that I don't know. So all my knowing does nothing for me, you know. So what I have found is I have to align and I have to define change. So for me, and this is a target also. I got to give you a statistic. I forgot about that one. Value area high, 72% probability. Past performance not indicative of future results. This is all the reasons why I'm taking longs. And don't forget the ETH low. If I got to an outside edge on the ETH low, then maybe I'm going to take the ETH high. So 72% probability to go there. 90x% to go there. And then, what is it? 82% probability to go there. So I'm giving you the reasoning for the long. Watch. Remember where support is. It's going to be in here. In here. And there's my opening swing low. So I got support here. I've got support all in here and stops here. Let's not forget. Now, this is where I'm trying to go. And whatever it does, right? So, opening swing low. So here's the way I work this. First of all, I know the opening swing low is weak. This is a long for me, and I call it VPOC migration. What this is this was the price that was too low, this, in here, all right, and my opening swing low. And remember, what do I know? There's stops here. So if I come outside, if I get long, which would be here, I'm trying to come there and come out the top. Now the other thing is, let's look at that value area high. See? There. So any trades I'm taking from any location here is the scale there, 72%. So I have to get risk neutral. And the reason I always get risk neutral, but what's really important to remember, what's sitting under here? Stops. So I'm looking at the statistics and I know even though I'm going for this, my concern naturally is I'm squeezing. I'm in a downtrend, and it's Friday. So the trade for Friday for me is to look for the squeeze and flattening out ahead of the weekend. Now, to what extent? Clueless. Anyway, scale. So scale. Now, when I get it, this takes the trade out, okay? And it's either a scratch or a stop, all up to you how you manage the trade. So let's look at this. Let's look. And remember, I've got this. So this makes me, I think the term I want to use is uncomfortable. But I have to tell you, I'm always uncomfortable because of randomness. So when I come out under the opening swing, here's what can happen. If I come under here, I can go there and wherever. But statistically, what do I have? Right? This and this. So I'm not taking shorts. I am, of course, what? Uncertain. So if I get a stop pick and I come back across, I can then get long again. And where am I referencing? Let's come back. All of this. So all I know is I got stops under here. Thanks for playing, Tom. You get a coupon to the buffet. Pick, and then I can buy this. So I can, let me show you microstructure again. Now these have to be vetted, this might not be anything that you would want to do. Not saying you should. I have no clue. It's not my job. Let's look at what I know. I know I had my buyers here and my opening swing low. If I get below my opening swing, there's my sellers. Those are the stops coming out from the longs, and then I see my buyers. If I get long, like here or here, my stop is going to go there because I've got buyers here. Other traders in TraderLab, if they get long here, they're going to put their stops there. I saw a question this morning in the lab. What would make the difference? I'm not mechanical, but I know if I see buyers here, here's the thing. Let's look at change. When I come down, you see the range on this rotation. So this says to me, it's all over, you're going to zero. The sellers are in control. The sellers are in control, okay? But when it changes, here, let me show you the change. It's easier to do it this way. Sellers are in control. There's my buyers. So right here, I see change. Here, I see the change because look at my up rotations. What do I got going on? Well, here's an up rotation, but this is my retail price, this yellow line. If it's too high, then what? I'm not paying that. Look at the language, and I leave it. Also, what else do I know? My opening swing low. I cannot get long until I take out the opening swing low, and then I have to look for buyers. So right here, I take out the opening swing low, and I see a change right here. Now, when I get the change, because I'm talking about upward rotations, you see, you don't see them, do you? I got downside rotations. This rotation is different. Now, here's another piece. So if I see this, and now I get a sweep, this is I call it a warning Will Robinson moment, because here's the possibilities. I get a sweep, I can ignore it. I'm saying the market could just go through it. That's one. And the other one is I can get a counter rotation. If I got long here, my stop is going to go there. If I put my stop there, I'm going to get stopped out, take a full stop, and then I'm going to put it back on here. And my stop is where? Here? Or, subject to you doing your research, if you get long here, your stop's under here. You have to determine for yourself and your psychology over time which stop placement is better. Here's the thing to think about. Let's say you put your stop there and you get taken out here. Couple ticks. and then you get long again. Now you got two stops. Is the value of this stop and the potential to take another stop with your stop under here have more risk and more financial loss than one stop under here? That's the question. You have to answer that, okay? So this is a long, and this is called mean reversion. Underline the term mean because it's outside in trading, and that's just the nature. So if you took this, you're trying to go there. My stop goes here. Who knows? Don't like taking stops, do you? If my stop's there, I'm stopped out. I get back in again, and I'm trying to go here. So the trade is there to there or there to there, no clue. Now what do I know? Let's talk about what I know. Same thing I knew at the RTH Open. What do I know? I know is the market is short. I know I got longs here. If I can't continue to squeeze, these longs get popped. That's how it works. Buyers are here, sell stops are there. What do I know about this? Remember, this is resistance. And what is this? Is this a strong high or is it a weak high? It's a weak high. It's a double top. Weak. If I take out the weak longs, now I got shorts in here. Okay? So I'm trading the rotations. Not saying it's a good plan. It's just the one I got. What can I tell you? So this is a long. This is a scale. Now where's my resistance? Watch. There. Break high. Now where is support? Well, let's watch this. Let's watch out here. Let's just watch. Where am I trying to go? Right? So this is my longs. You know, what do I know? I always say, what do I know? Because I don't know. And then there's this. And then this one. And resting liquidity. So my primary trade is to get here because of statistics. Now, the next area is here, 42, and then fill the gap and go from there. So this is my long, okay? So that's all my longs. Now what? Watch. Now things get weird, as they say. Any questions so far on the longs? So at this point, I'm not off the longs. Let me show you where things get, as they say, interesting. Questions, guys, post them. If you're in YouTube, go ahead, take a shot. I can see the chat in YouTube. It's not in the right place, but I can see it. Still don't know where it went. So let's take a look. This is called VPOC migration. Remember, I made it up. Who knew? Now, how do we use this? Well, here's a couple things. Let's look at order flow. I'm going to take you a few different places here. This comes into the book. What is that? Well, that's a seller. All right. That's nice. Now what? There's my seller. There's my icebergs. Right here, bounce. Now, right here, this is resistance. But, now here's the but. Let's go to the but. The but is, where is this resting liquidity? Look where it is. It's at the ETH high. Might we anticipate, since we have a high probability that you'll get some profit taking at the ETH high? I mean, this is not a secret. So if I know there's liquidity here and I can break above it, it becomes support. Then, because of the high probability of yesterday's high, it's my next target. I also look at yesterday's high, and what do I know? There's buy stops from the shorts in here from yesterday. Look at the reasoning. And I got this. So I can target this or just yesterday's high. No clue. Let's keep going. Now let's look at the structure. I'm going to draw a few little things for you, and these aren't anything more than what I called structured trading. Now the thing about this is not mechanical. The other element which has me on the longs is what? Context. Now the thing about context, and at the top of the stream, I do talk about time frames. So what I'm doing is, I know the higher time frame is down. no question in my mind that it's down, but I know being it's Friday I can squeeze. So that's why the longs, and I don't know. Here's the other part. If I came in here short, think about if you're short coming in today and you see where we tested in the ETH low and you know there's a gap and there's buy stops, think about it. What would you do? That's how I start. And then whatever it does, it does. So what I know here is resistance. If I break high, it becomes support. Here, resistance. If I break high, it becomes support. What about this? Resistance. If I break high, it becomes support. Just watch the thinking. Not saying it's good. I'm just saying what I try to do is narrate the behavior of the market, not predict, because I have no clue. And by the way, this should be there. I'm not going to mess with it. I don't want to take your time. So right here is support. Going to the moon. Going to the moon. What's this? Resistance, single, outside edge. I was looking up here. Let me show you real quick. And again, it's not about anything more than what it might do. This here, the 42 quarter, this is that. Now, this is called a low volume node, composite low volume node. What is low volume? It's when the market runs and we leave this gap in volume. Often what the market does, it'll come back into this. And remember, my plan was to get here. That's how I was just trying to go. But this is kind of an outside edge. So I know I've got this. If I get through here, I can get in there. That's it. That's the longs. So that's all I got for you on longs. So, and then you can see what we did. This is what we did. Okay, so that's as far as we got. But I want you to show you the rationale. Not the, remember, it's not prediction. It's alignment. So I doing that, and that's that. Oops, wait a minute. Let me bring this back. Sorry. So this is my outside edge, and I'm looking to come in here. Not so much. So see you later, Tom. Thanks for playing. Coupon. So resistance becomes support. Resistance becomes support. Resistance becomes support. Going to the moon. Break low. This is a short. Or, and I'm going to tell you the way I look at it, not the way you should look at it. The label, a single, I'll show you that. A single is when the market accelerated, it leaves a space behind. This. So this, we gapped under this. So it's around 41. So 41 comes from this day over here. So it's a low volume area, and the nature of the market is to come back to these areas. Okay. And then we have yesterday, previous day's low here. And then yesterday's high is there. So that's why it's a target, whatever. And then, this. If we got in here. Now, that doesn't seem to be on the list, so not so much. But anyway, that's what a single is. It's just in market profile world, these are what's different about volume profile and market profile. Market profile is based on 30-minute. They called it brackets. So when I learned this, it was based because we didn't have volume. So we had time. So it was a time-based process. And the idea was that if you spent time somewhere, it would have volume. But if you ran someplace, there's no volume, it leaves that single. So it's not auction. The nature of the market is come back and check it. Now, what will it? I don't know. So I don't predict anything. I just go, well, maybe not. So here, and I know traders in TraderLab, I'm pretty sure, some that I know would take a short here. Okay. Now, for me, here's the choices. And again, this is plan specific. For developing traders, what I always suggest is identify the vulnerable side or the dominant side until it changes. Now, we don't know change till hindsight. At least I don't. Now, I'm sure there's other traders who recognize change before the fact. Me, not so much. So I just kind of follow my thing, and I always am looking, because I'm reading this. It's always like, what's going to happen here? Oh gosh, I got my seller. But what do I have? Statistic, you see? And and whatever. So when I see this, I'm not going to do anything with it because my trade, remember what I did down here, I grabbed the inventory, the sell stops. If I get sellers, I'm going to get buyers on the other side. Otherwise, it wouldn't go up. This is where my resistance is, statistical probability to get to yesterday's high, so no problem. Other than I might get taken out of my trade. Is that a problem? No. Why? I have no control. So what am I going to worry about? Just following my plan. So this resistance becomes, see it, support. So now I got support. I can bring my stop, if I choose, out here. Once this extends, and this has to be vetted, this becomes trade management. Why? There were sellers here. What happened? Think Pac-Man. The buyers consumed the sellers, and I'm above them. So the old concept, resistance becomes what? Support. Resistance. There's my sellers. What happens here? I get my icebergs. I get above them. This becomes support. What about this thing? What do I have here? Sellers. What happens over here? I get above them. It becomes support. So as an idea, I trail my stops. I have no clue. So I'm not trying. And here's the other thing. I got to tell you, emotionally, every time I give MF feedback, let me ask you about this. You have open trade equity. Let's talk about emotions for a moment. Let's say you've got a 15-point trade working, and you give 5 points back. Okay? Do you feel like you lost something? Or do you feel, I'm talking feel, remember the word, do you feel like you're a loser of those 5 points or a winner on the 10 points? What emotion surfaces? What you gave back, the loss, or the success of following your plan and the profit? Our nature is the glass half full or half empty. In this business, because of hindsight, it's always half empty. Does that resonate with you guys, by the way? Matt, I'm rolling over this weekend. I just got a question about rollover. I am rolling, and Monday I'll be quoting the June contract. So everything gets adjusted, but everything is the same except for the price. So right here is resistance. Break low. Now this is subject to your plan, a short. But as I was saying, for developing traders, I always suggest you attempt to trade with what you perceive, based on your definition, the dominant side. Higher time frame, dominant side is short. Short time frame, this developing time frame, short squeeze. Time frame specific, isn't it? So anyway, this is an exit. Unless you want to sell this. Now let's look. If I come outside, and again, only plan specific, I get a sweep. Now right here, I get a sweep. What do I anticipate? Higher. I break low, I get the sweep. Same thing over here, except it didn't go, But often what I see, when I get these sell sweeps, I'm going to get a rotation. Now I know I have resistance here, right there. That's resistance. Now what can happen? I can go through here and, or break away from it. If I break away from it, I now know this is too high. Let me give you another way to look at this. I'm going to take you just in a little more micro. And this is a way to stay in alignment in a very short time frame or microstructure. And then it's up to you to determine where do you trade. Now, if I'm outside yesterday's high, I'm outside of range, I'm outside of value. As of this moment, it is longs. So this is either a trade management opportunity, one or the other. And here's what gives this away. I got liquidity here. This is support. Okay. Microstructure, I have buyers right there. You can see them. That's why this is happening. You've got your, watch, resistance, break high, support. Break high, support, resistance, no clue, break low. Now, what's here? Buyers are there, buyers are there. Sellers are where? There. Iceberg, break low. This is change. So I know I have buyers here. Why did the market go up? You see this delta? This is a seller. Why does the market go higher? Because they were absorbed. So I know, right? I know after the fact, not when I see it, the teeth will chatter, but I know my support is here. So right here, it's, I don't know, break high, support. Okay, so I got this, and it's going to, it's going to the moon. Going to fill the gap, except break low. So what happened right here? The buyers got run over. So this is the first suggestion that the buyers in here, 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 here might have a problem. And there. Now I have this. So this is like, Tom, what should I do? What am I going to do? Break low. So I have a short, or an exit. Here, and this is really where this sets up. And then the possibility, not saying it is to do what? Come back down here. Reversion. Or not. Or just pull outside and then continue. That's the possibilities. Now, I'm going to tell you, I didn't take a short here. Okay? For me, this is an exit. That's as deep as it gets. Other traders took a short. I think they did very nicely on those shorts. Not me. Okay? Because that's just my plan. Now, here, I get a sweep, and I'm at the mid and the VWAP. Now, this trade, I'm not a big fan of mid VWAP. To me, that's what retail traders do, but let's look all the pieces that come together here. I get the sweep. I have my liquidity come in. I've got my, so my VWAP is here. My mid. And what do we know? Retail trader behavior. What do they do? Buy the mid, buy the VWAP. Do they get paid? Sure. Why shouldn't they? So this sets up a long structure. Now let's come back and look. Support becomes resistance. Support becomes resistance. Support becomes resistance, etc., etc. Watch. So now, if you take this long, then you know what you got for an outside edge. Let's just look at it. So if you took this with the liquidity and the sweep, this is structured. It's up to you. Where's my resistance? Where is it? See it? There. If I break through it, I have the next one. There. If I get through this, I can look over here. And then here. So long from here, you're trying to come back and come out the top. I'm just saying, okay? Now we get VPOC migration. VPOC migration is the new retail price. Great, going to the moon. This is too low. Watch. So buyers are here. Now what else do we know? Sell stops are under here. Shorts are here. Buy stops are here. So if I get long here, I'm trying to come out the top and I have to get risk neutral. When this shifts up, there's there's two possibilities. Remember, if this shifts, there's two possibilities. If it's too low, I go up. Well, let's look at the opposite idea. Where's too high? Isn't it there? So that's too high. And this is VPOC migration. There's two possibilities. If I break low, I have to get above here to go. If I break low and I can't clear this, then there's trouble and I have the potential to come back there. That's what I know. And the other thing I know is I got stops here. VPOC migration says language of the market too high. So I got too high, break low, get the stops out. Thanks for playing. They get a coupon to the buffet. Now here suggests counter rotation. Sweep into the liquidity, into the stops, and then the potential is to rotate. If I cross over, I can be looking at longs to come there. Just telling you. Break low, stop pick. Here, looks like it's going to go up. Breaks down. If I can't get here, trade's going to fail. Trade fails. Now VPOC migration, and then it migrates again. Now this is too high. So this is starting to tell me there's big trouble. Because I'm failing my levels. Now, let's look. So what I know is this was too low. I found too high. Retail shifts down too high. If I can sell this because I have a sweep and I have a level, if I break down here, I can be looking to sell out here also. This was support. It becomes resistance. I've got my mid and my VWAP, and I also have this. So if I get short, so you know, I can get short here, and if I can't get in here, I have this. And I have sweeps. I can use this. Depending on my skill, I could use this, but I'm just going to say, and my stop, by the way, and I get asked, where would you put your stop? Out here. I'm just not able mentally to put my stop with everybody else. So what I've found for me, and it's not a recommendation, is what other retail traders do. I work very hard not to do it because I know most of them cannot sustain themselves in the business. Because here's the thing, suppose I get short here, I put my stop there. What happens? Why would I do that? Or I get short here. Why would I put my stop? It's not about where you get short. I can get short here and still get stopped out. So I have to be looking over here to see the behavior. Why is this important here? There were sellers here. So now when I come back over here, I know there's stops here. So if I'm going to put a short on anywhere, my stop is out there. Because if I put it there, what do I know? There's going to be stops there or there, wherever it is. But I got stops out here. So wherever I'm going to put my stop, I got to look at something. And anyway, that's where I put it. It's up to you. And you could put it where, you could put it there, whatever you want to do. Okay? Has nothing to do with what I do. I'm not even saying what I do is any good. I'm just saying it's a process that I do, and I just take whatever comes, Support is here. Resistance is here. Resistance is there. If I get short, now I know I got stops here and I had my buyers here. Okay? Also, at 9:30, now we've rejected the high. What do we have at 9:30? The IB, the initial balance. Now, what's the statistic, Tom? There's a 98% probability we take out either the first hour's high or low. I think we can agree that maybe not so much on the high, right? So what do we know here? Buyers are here. they come in over here. This sets up a short. Let me show it to you. Now, 9:30, the IB, which is right, gonna open this up so you can see it. Maybe, there it is. So, and this is what you might say rather aggressive selling. Okay, so right here, now if I don't have any shorts, this is a structured trade. So let's assume I never had an opportunity to get short, and I'm asleep at the switch. I went to breakfast. I come back. This is where my IB low is, 98% probability. We have a trade in the TraderLab called the IB continuation trade. It's a short, and it sets up right here. Let me draw this in for you, help you a little bit with this. I'm going to show you the structure. And these are ideas. These are just ideas. This is how you can integrate Bookmap order flow tools. Now, the other part of it is you're going to be just as stuck as everybody else in randomness. So there's no holy grail or secret sauce. But the more tools you have, and it's not predicting what'll happen. It's observing where it might happen. This is what trading is. Where might this happen? If I have buyers here, what's under here? Sell stops, right? There's my buyers. Now look what happens here. Next time I'm coming down and it's the Acapulco cliff dive and I have my 98% probability to take this out, and I can see by the selling that this isn't just a rotation. This is where's the exit? All right. So what happened was we did a squeeze in the morning early, which is the plan. We ran out of the shorts being squeezed and our sellers came back in. So that puts me only on shorts now. All right. So this is a short. This is called the IB continuation trade. So the way it works is I have my liquidity. So that's my support. And I have location. Think real estate. Here, let's look at the entry. So I have this support, which I anticipate is going to go, the way of the dodo bird. Break low, pull back. This is a short for me. So I'd be getting short in here. Now, let's talk about how do you manage this thing, right? Well, there's a couple things. First of all, when I break here and sell it, where am I going to try to go? I'm going to try to come back here. I see a sweep. Now, when I see a sweep, that suggests what? Counter rotation. So where were my sellers? But this is support, and the old saying is support becomes resistance. So this is my short, okay? And then get risk neutral. And, this has plenty of range and then this is a problem. What it is it says sweep. There's my buyers, that's absorption, and I have resting liquidity. Remember, I have no clue. I can prove it. I'm clueless, but I'm not ignorant. I know resistance is here. Now, when I come back here, if I'm micromanaging, just so you know, I get taken out. If I'm further away, this is trade plan specific. What I do, I'm going to give you just some ideas. Again, let's look at ideas together. Just pulling this out of left field. You see these these are auctions, and we think of time frames, but there's no time. It's just behavior. So what you're seeing here is I'm breaking away from this volume, and there's my seller. I consolidate. Now, if I put a little box over this thing, I'm just going to draw some of these little things for you. So you could and I just want to outline behavior. So when I'm outlining this behavior, and there's another little piece, this was the retail price, don't forget, from yesterday. If I get under it, maybe it's unfair. I can actually I can sell this, but let's not think about that. Let's look, the buyers are here, the sellers are here, there's the extension. These buyers, whoever they are under the bus. So the retracement gives me the opportunity to sell it, and I can put my stop out here or a little higher. I break low. Now what? What do I know? Where were my buyers? See how this is going? Too high, too low, retail. I'm not paying that. Leave the store. Here, too high, too low, retail, high volume. I'm not paying that. Leave the store. Buyers were here. This becomes resistance. Support becomes resistance. What is this? Resistance. What is in here? High volume. I'll just draw it for you. So what you're seeing me do is that's high volume from yesterday, and it's for the whole day. As I go down in time frame, this is the same thing. For the whole day, this was the fair price, or high volume, retail. If I get below it in the daily time frame, in the intraday time frame, I'm doing the same thing. This is the fair price only as it relates to this. If it's too high, I leave it. I'm not paying that. Leave the store. Are you sure, Tom? Yeah, I ain't paying that. Forget it. Now this is resistance and this is too high. That's why I'm leaving the store. What about over here? This is support. If I break below it, it's resistance. But where's my stop? Out here, where it was too high. I'll be out here. Okay, I'm just giving you ideas. I'm not saying anything more than that. So what else do I know? Where's my volume? It's right there. So too high, too high. What's going on? I don't know. Break low, resistance, but what's too high? Here. So when I'm doing these trades, I am not going to micromanage them. Okay? Anyway, south of the border. Let's keep watching. So resistance, and what's this? Support. There they are. What are they? Buyers. What is this? Sell delta. What happens with the seller? Sell stops. Icebergs use the liquidity. There's our buyers. Now the question becomes, why are they buying? You're thinking the same thing. What are you doing? Why do they want to buy this? Have you ever thought maybe they're just covering? Does it matter? So let's draw our little thing. I'm following process, right? My process is mechanical. And as long as I'm holding these areas and I'm sequentially moving lower, and don't forget, IB continuation trade. Don't forget, this is a short. All this is short. So got this. So I've got this, I got this, I can sell this, I got to get under here, support, sweep, counter rotation, resistance, whatever, out here, sell here, sell here, sell here, support, going revert, If it comes up here, maybe a long, maybe not, support, watch, resistance, out, okay? Now, let's watch. So, watch. So, for me, if it comes above here, I'd be out, okay? So, now I don't keep my stop here, but I manage my trade. Watch. So let's look. I'm using the same process. Support, break low, resistance. What about this thing? Tom, I don't know. What do you think? Break low. What is this? Resistance. Here, break resistance. Here, I'll show you again. These are just ideas again, guys. It's just a way to operate. That's all this is. So, no clue. So for me, trail, break high, this is resistance right here. Okay, see where it comes? Right here, out. Just that's it. This, when it comes above here, this is the last place, you see. So if so this is what I would, I get out here, or in here. You could also use this one. I don't, I'm always thinking, and here's the other part, settlement. This is a target also, just saying. And then we have yesterday's low. Who knows? I don't know where we are, but let's see what we're doing. So let's go look. Let's see where we come back. Do you think this was meaningful, this location? If I come up here and I break here, what might I do with this? I don't know. Let's see what we can do with it. This is resistance. And the other thing I know about it, there's going to be stops here. I don't know until hindsight, I get taken out and I have no clue. Always what happens to me mentally, I'm not talking about operationally, but emotionally, when I get this and then I see that, FOMO kicks in right away. I'm going, oh God, I got to get back in. It's, right? It's going to go here, right? Well, if I respond to FOMO, which I've done many, many, many times, think about it. If I respond to FOMO, it's an error, number one. Number two, over time, that's a great way to put yourself out of business. It's not about getting here, even though that's the objective. What it's about is trade management and just accepting randomness. The rotations are random. This is the problem, isn't it? Tell me that isn't the problem, because it is the problem. What are we operating in? A random environment of random rotations. How do you operate in randomness? Remember, 100% random 100% of the time. In my opinion, you operate in randomness by accepting it and then managing your trades, knowing you can't pick the high or low unless you fall over it by accident, and because nobody knows until hindsight. So at any time you put a trade on, you're going to put risk on, of course, and then the outcome is random. So we got to get over it. Very hard to get over it, but you got to get over it. So what this says here, I get this sweep, and what I'm anticipating is continuation here. Now, if it comes up, I get taken out, and that's that. Now, if I get taken out, I come back and I start looking. And where's my outside edge? Now, this will get you. Let me show you. Now, this is my area that's important because my sellers are here, you see. So this is okay. I can sell this. I can do whatever I want to do. I can sell this. I can sell this, or I can just use it for management. I am going for that. Outside day. Who knew? What I do know is my buyers, who are the shorts getting squeezed, are weak. Now, I know that also before the fact, but I don't know the velocity of the squeeze. So that's why the longs were first. But now that's off the table, of course. So now if I'm looking for continuation trades, all I can do is get short until it changes. I have no longs. So now I have to look. Well, I know there's stops there. I know there's stops over these swings, so I know that. I know there's stops all the way up the food chain. I don't know where it's going to go. Part of the thrill. But I'm going to show you the profile now. Let's come back here. I'm going to bring you back to where we were clueless, of course. Watch. So I'm over here. What do I know? This is an outside edge. I'm under the fair price from yesterday, and I'm coming down. I'm rotating. We're not paying that. That's too high. I'm leaving. Low volume is here. Oh, you're crazy. Down, 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 down. So as long as I'm under all this, I'm just going south. Everything is fine, having a wonderful time, feet up, thinking about the champagne and the caviar for dinner tonight. Resistance is here. Watch the structure down here. So all I know is I'm, here. Right here, there's volume. Now, my idea is that this is too high, and I'm going to do what? I'm going to reject this volume, retail price, and continue lower. Now, if it does the opposite, then I can squeeze. That's what I know. I don't know what it's going to do. Let's just look. See this here? This is an auction. This is like, I'm not paying that. Yeah, but it's on sale, Tom. Buyers, absorption. Where's my sellers? Here. Hey, I'm selling it. Get out of here. Yeah, but I'm buying it. Fair. Retail. So right here, after this, right? Come across here, then what? What do I know? I got shorts in here, which means I got buy stops. At any moment, I can get squeezed. So if I come across here, here's my choices. Eggs, right here, I've got my sellers. There's resistance, and I got sellers here. There's resistance. Now when this happens, the teeth chatter, and I have this. Or when I'm under here, I could get taken out here, or I can get taken out there. Either one, okay? And then it's, what do I do now? Is this the low of the day? I don't think so. So since I know the higher time frame trend is down, I'm going to look to put the trade back on again. But there's my buyers. So I had my buyers here, and I got my buyers above this. Once I'm above this, I got to start looking outside to for continuation trades. What am I doing? I'm squeezing these guys. Now, where to? Don't know. Come up here. When this is here, far as I know, I'm coming there. All right? I want you to know that's what I suspect. I don't know. You know, I got this. Who knows? They come back in clueless. I see the liquidity here. I cannot respond, but look at the alignment. Here. Now, I'm still looking up here. Just want you to know. So when I come across here, I know I got this, but this is what the important level is, okay? So I'm just telling you how I do it. I'm not saying it's any good. So I come up here. Notice what happens here. The liquidity comes in. It's like, hey, what are you doing? Break low. Break low. This is a trigger. So what do I have? I have this. I have that, right? And this, who knew? Break low. I now have this, which is related to that and that. All I did, in my opinion, was get the stops out. Here. And wherever, you know. But once I'm back under here, I can sell it again. And then I'm looking to come back across the range back to this. And then whatever. Notice where the support is. See it? So if I take a short here, and it's not a recommendation, I'm going to be looking where the buyers were or where the sellers failed. It could be either one for scale. Because, and I'm still going for this, but I don't know if I don't get under here, whether I will then come across and take these guys out, which would be me also. My stop would be there, don't forget. So then risk neutral, helmet, and then, you know, what's it going to do? I don't know. Where's my support? Wasn't it here? I'm showing you process. So the idea, at least what I had to do for myself, is become process oriented and fluid and stay. It's kind of like dancing or speaking a foreign language. I don't know anything in the sense of I know where it might go. I don't know how it's going to get there. So that's just the straight oil from the can, you know. Gary, my VPOC is a session volume profile. It starts at RTH open. That's where my volume point of control is. So you got to make sure your reset time is to RTH open and that you have it. And that's what'll. That's the only reason it's not accurate. This is support. So I can sell this, not so much. Now, if it gave me better structure, see, I can see it here, but there's my trigger under here. Well, now what? Well, this is the ideal place to try to sell it, in here, and stop would be up here or up here. Okay, if I get in here, which is I would, because of why that, then my stop's got to go above here or even here. Too much risk, it doesn't fit your plan, you don't do it. Notice where we test. I mean, we come up here. Let me show you a little more micro. I want to show you some other ways that you can use this. So right here, no way. Okay, at least me. You let me know how you did it. This is my level. So I'm coming up here, and if I'm sitting here, I might be looking up here. Let's look at something else. What's this? Now I'm trying, this is where I'm going to try to trade, but right here, why isn't the market going up here? Because I've got icebergs on the other side. Break low, trigger. If I can sell, I can sell this. I can sell any of this in here, but my risk is going to be, higher. Why? I'm good. I got range. It's called risk reward. Watch, support, watch the behavior. So I understand, and you will if you're in TraderLab, there's always what might happen, not what will happen. This is support. See the behavior. Bounce, break under it. It's now resistance, support, bounce, resistance, bounce, squeeze, going. Now right here, don't know. Remember, where does it fail? Up here, up here. So I'm sitting here, and I'll tell you what I go through. I go from, emotionally now, I go from euphoria to depression. Fear, FOMO, fear giving it back and all that. This is human. This is our wiring. And what most developing retail traders do is they respond to this. Oh, I don't want to give it back. Fear of loss. But if I know that support and I scale here, then I'm risk neutral, and now emotionally I'm attached to the rotations, but my plan is the thing that guides me, not how I feel. Support, 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 right? Nauseous. What's this? Remember, I was just talking about it. Let's come back. So what's this? Buyers, sellers, resistance, trigger, too high. Look to the right, and I'm out of time. Resistance, liquidity, resistance, 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 or whatever, right? Support. Where am I going? Here. What's this? Could I sell this if it's in my plan? I don't know. What do you think? Any questions? What's this? Resistance. Resistance. Sweep says potential for counter rotation. No clue. And then that's as far. I haven't seen any of this, so I'm just showing you how you might narrate it. Hope you got something from this, guys. I appreciate you visiting TraderLab. Remember, I will be rolling over, be trading the June contract starting Monday. You don't need to roll over unless that's in your plan. I do roll over and adjust all the levels. Also, if you're interested in TraderLab, there's a link in the bottom of YouTube. There is no cost for it. There's a library of webinars, document section. Everything I share here in the TraderLab is available to you, plus the TraderLab community itself. TraderLab's about the business of trading. It doesn't matter how long you've been trading, what you do, how you do it. What matters is if you're only having random winners and you're still don't have a sustainable process, then unfortunately you may end up being a statistic and go out of business. So in spite of the random winners, how can we only engage when we have an edge that favors us, despite the losses, which are costs of production and overhead? If you're interested in the answer, And I can't say that you'll find the answer that's specific to you. You can join a community where it's all about the business, sustainability, trade plans, and only trading when you have an edge that favors you. And you can download these, and there's a lot more information, of course, available to you in the TraderLab. And remember, there's no plug and play. You actually have to come to TraderLab, roll up your sleeves, and do the work. Please give a like if you're visiting in YouTube. Thanks so much for visiting TraderLab. Hope you got something from this. When there's a lot of volatility and rotations, I can't get to real time, but there are streams that are in the library in TraderLab up to 4.5 hours long of real time narration if you have if you're inclined. Thanks everybody. Thanks again for visiting TraderLab. Look forward to seeing you on Monday.